Hi, fellow traders. Here is a fresh analysis on EUR USD. So now we have a clear bearish setup and trend as well as every other tool is showing that we should sell right now. So I'll explain you what happened after this Gartley before I proceed to illustrate the sell scenario. So when this Gartley was formed, it is reversal pattern and price should react to the upside that had happened initially after formation of this bearish candle from this 30% of the Gartley. I had suggested to enter sell, which didn't work, and we had to exit the position with minus 15 pips because market had moved to the upside and Gartley is a reversal pattern, so when it doesn't work for full reversal, at least it caused 30% retracement. So, and when 30% didn't work, then definitely further movement to the 50% was expected. But market didn't go to 50%, and this buy setup also failed today with minus 20 pips. So it is almost like 35-40 pips in this roller coaster ride of first sell here, then buy here. The reason behind expecting this 50% of Gartley was a previous price behavior that can be easily explained if we go to 1 hour time frame. If we look at the price behavior here, then market reacted in ABCD 100% style. This was the A, B, C, and D. So move from A to B was equal to move from C to D, ABCD 100%, and this was a total move of almost 78, 79 pips. This time similar kind of behavior was expected. That's why I had exited sell, entered buy, and I was expecting this area. And this area is coinciding with 50% of the Gartley. A, B, C, and D 100%. So EUR/USD was expected to move to this area, this confluence resistance. And this total movement is also almost like 78, 79 pips. Yeah, 78 pips. So as per the previous price behavior, similar harmonic price behavior was expected, but today market reacted from 38.2 already, which was just ABCD 61.8 and 38.2 of the Gartley. So this from this point, a mild reaction was expected. So market reacted to the downside, again started going up, but here market failed to cross it and again started falling. Still, there was a hope that it can return back and it can go to the upside as long as it stays above 1113 area, because previous support was here 1113 area. If you look at the low of this candle, this was 1111.9. So yeah, you can say 1113 or 1111. There are different prices in different brokers. So this price stayed as the support last time, and again here the same price area acted as the support. So this support area should not be taken by the market if it really intends to go to the upside and complete this ABCD 100 and reach this 50% of the Gartley. But this has been taken out. Market came down with very fast speed. RSI crossed below. Last time RSI had crossed down, then crossed above, but this time this is pretty clear. RSI crossed below. So we'll have to forget about any bullish picture right now, and we have to now think of the long-term bearish scenario, which is there on weekly time frame. That's why I now remove the Gartley. The story of Gartley is over. Weekly time frame has a bearish Gartley, and this is quite bigger and more effective. Plus this candle, and this candle had made an evening star, and this picture is going to impact the market more than anything else. So now let's go back to 1 hour time frame and let's see what trading opportunity we have on the short side, and how can we enter sell position, where to place the stop loss, and where to place the take profit. So now this whole movement looks like a three drive. If I go to the 4 hour time frame, then it will be looking clear. So this is the first drive, this is first, Let me make this line a little thick, and let's make it red. All right, first drive, this is second drive, and now we'll get a third drive to this area. This this is going to be the further development of price. We do not have any other scenario to the short side. We do not have any ABCD because this ABCD 100 was already completed. This was the Fibonacci extension 100. Then Gartley was formed, and everything, the story of Gartley is over now. So now it is the three drive pattern. So first, after this first retracement, the second drive was almost 127.2%, more than 127.2% extension of this retracement. If you remember, there was a minor butterfly. If we join this point, this point, this point as a triangle, and then this point, and this as a triangle, so this was a minor butterfly. So this butterfly is also measured as per this first retracement, and 127.2% is the minimum completion point of the butterfly. So that was the 127. If you plot Fibonacci here, then we'll have this 127.2, this line. See, so market had reacted here but fallen down a little more, but it's not necessary that market should cross 127.2. The minimum mathematical requirement for completion of three drive is 127.2% extension of the last retracement. So the second drive is already 127.2, more than 127.2 of first retracement, and this drive is supposed to be 127 of the last. So this is the nearest target. We should not consider anything else for the target, because now this target is more significant, not only because this is a completion point of three drive, but also because this is the last natural support. Natural support means last time price had fallen and had taken support in this area. So this is coinciding with 127.2. So this is where we will place our target. But now question is how to enter. Let me just remove this. This is unnecessary now. The story of Gartley is over. So yeah, let's go to 1 hour time frame, and there I'll explain how to enter. So okay, here is how we are going to enter. This is very fast fall, and against this fall a 30% retracement is expected. So 30%, no, sorry, let me join it here. 30% of retracement against this fall is this area, 11 15 9 11 16. It can be a 1 pip more or less in your broker, but roughly we can say 11 15 will be our sell entry, and our stop loss will be above this high. So this will be a 31 32 pips stop loss and 48 pips take profit. And this is how we can recover the losses which we incurred in this failure of bears and then failures of bulls here. So in a single trade we will recover the losses of all these previous two failed trades. So that's all about this bearish setup, and this is actually caused by fundamental factor. If you know president of ECB Lagarde, then you know that the ECB Lagarde 2 hours ago said to give policy review around January 23, which has been perceived as a bearish signal in the market by traders. So that's why last hour was a very bearish hour. You see this last hour candle. This bearish move was even bigger than all previous bearish move. So Lagarde is going to speak tomorrow again at 1 p.m. New York time. Now the time is 9:13 a.m. And as per the behavior of market following what Lagarde said today, majority of the traders are expecting that tomorrow Lagarde is going to be bearish. I mean dovish. Therefore, entering sell is in line with our technical analysis as well as fundamental analysis. Second fundamental thing is CPI today. CPI from the United States came in line with expectation, that was 0.2%. Core CPI is 0.1% less than the forecast, but market completely ignored. And if you look at the reaction even on the USD JPY, there was a mild reaction. This is the candle of 914, this is the candle of 830. So it was a mild reaction, and now it looks like going up. So USD didn't react to slightly negative release of core CPI, and it has been understood as stable CPI because the main CPI came 0.2%. Second impacting factor will be retail sales tomorrow, which is already forecasted to be a little more than the previous release. And definitely this release is going to be more than previous release and going to be in line with the forecast. Retail sales is always expected to rise during holiday season like Christmas and New Year. So I think retail sales tomorrow will not be impacting Euro USD, will not be sending Euro USD to the upside. So the Lagarde factor, US retail sales factor, and all the technical factors are saying the same thing, that is sell Euro USD. So that's all about the Euro USD right now. Thank you for watching.